Every time someone says follow your passion, there's another headline about how creative workers are overworked, underpaid, and swallowed by algorithms. Why do we treat creativity like the thing that saves our souls, and then structure work so it destroys that very thing? Let's get one thing out of the way. Capitalism doesn't hate creativity. Far from it. Companies, advertisers, film studios, and tech platforms depend on creative ideas, new products, catchy songs, memorable branding. The catch is what kind of creativity capitalism wants. It tends to favor predictable creativity, ideas that can be scaled, packaged, sold, and mapped onto existing revenue models. What it doesn't like as much is slow, risky, exploratory creativity. The kind that plays with form, that fails a lot before finding something rare and true. That tension, demand for novelty versus demand for predictability, is the core problem. One of the deepest and best studied psychological reasons creativity gets squashed is how external rewards change motivation. Decades of research in psychology show that when an activity people already enjoy becomes linked to extrinsic rewards, like money, grades, or deadlines, intrinsic motivation can fall. That's called the over-justification effect. Early work by Edward Deci and later by Lepper, Green, and Sivers and Nisbet showed that introducing tangible rewards for an enjoyable activity can make people less likely to do it when the reward is removed. In plain language, when painting or writing becomes work paid by targets or metrics, the inner drive that made it joyful often fades. Think of an ad agency. Clients pay for a promised result, sales lift, clicks, not for the artist's private exploration. So the creative brief narrows the work. Make something that converts. That constraint is useful for business, but it can channel artists into optimization rather than invention. The ad that worked this quarter gets copied, tweaked, and then multiplied across brands. Over time, the space for radical play shrinks. Capitalism's labor structures also matter. The rise of the gig economy and precarious creative labor. Think freelance illustrators, contract musicians, indie filmmakers hustling for gigs, forces people into short-termism. When rent, healthcare, and survival hinge on the next paid job, creatives choose the projects that pay quickly, not the ones that take 5 years to mature. Research on creative labor and the gig economy documents this compounded precarity. The need to be constantly visible, constantly producing, and constantly optimizing for marketplace signals, ratings, clicks, client feedback. That speed and precarity squeeze out time for deep practice, experimentation, and risk-taking, all essential for major creative leaps. Musicians face this clearly. Streaming services reward songs that perform instantly, short intros, immediate hooks, and algorithms that prefer predictability. Artists are nudged toward formulaic tracks that hit playlists rather than long-form experiments that might take time to find an audience. The result? More songs engineered to game engagement metrics, fewer albums that ask listeners to sit and build meaning over time. Another mechanism is the financialization of culture. Under capitalism, art increasingly becomes an asset class. Paintings, collectibles, even certain viral creators become investment vehicles. When art is evaluated primarily by resale value or investor appetite, that affects what gets produced and who gets rewarded. The market tends to elevate art that fits collector tastes or speculator logic, often conservatizing taste rather than expanding it. There's a rich literature describing how cultural labor has been folded into market logics. Cultural institutions courting donors, galleries promoting artists who are already bankable, and tech platforms monetizing cultural outputs without always compensating creators fairly. This structural transformation doesn't just change individual incentives, it reorganizes whole cultural ecosystems around extractive logic. Consider the contemporary art auction. Sky-high prices for a narrow set of artists make headlines, which signals to galleries and donors where to place bets. Young artists feel pressure to map their work onto that market trajectory, sometimes altering their practice to appeal to collectors, curators, or gallery PR. That's not universal, of course, but the market's gravitational pull is strong. Academic and popular analyses show how platforms reshape creative work. Creators are incentivized to produce more content, faster and tuned to platform norms, a process that standardizes form and flattens stylistic diversity. In short, algorithmic incentives favor predictability and scale over idiosyncratic risk. Large firms and gatekeepers, publishers, studios, labels, major galleries, are risk-averse because they manage big capital and must protect investors. Risk aversion leads to formulaic content, sequels, reboots, safe genres, and data-driven creative choices, focus groups, market tests. Academic work on Hollywood's shift to blockbusters shows exactly that. The blockbuster model is built to minimize risk and maximize predictable returns, often at the expense of diverse storytelling. Blockbusters are engineered investments. They're designed to franchise, spin-off, and sell merchandise. Original films with ambiguous endings or weird stylistic choices get fewer green lights. The result is a culture of imitation and derivative content, financially smart, creatively stifling. There's also an ideological layer. Capitalism's dominant narratives valorize market success and individual entrepreneurship. Artists are told to monetize their craft, build a personal brand, and think like founders. This pressures creators to reframe their work as product and themselves as micro-entrepreneurs. That narrative erases structural questions about public funding, collective support, and the social value of long-term exploration, and places the burden of survival on individuals who must perform creativity as hustle. Scholars call this the creativity imperative, the expectation that everyone must be creative on demand, often without the material support that real creative practice needs. Okay, this all sounds bleak, so let's be fair. Capitalism also enables creativity. Market demand funds new technologies, supports studios that can afford high production values, and creates channels that help some artists reach vast audiences quickly. There are successes where commercial incentives drove major innovations, and some forms of extrinsic reward, like meaningful feedback, recognition, or grants that preserve autonomy, can actually enhance creativity. The literature on motivation is nuanced. It's not money always kills creativity. It's how rewards are structured and whether autonomy, competence, and relatedness are preserved. So where does creativity survive? Often in pockets that protect autonomy and time. Public arts funding, artist residencies, experimental indie labels, community-run spaces, and collectives. Those environments lower the immediate pressure to monetize, giving artists the space to fail, iterate, and develop depth. History is full of examples where institutions or patrons provided a cushion that enabled daring work. Think of Renaissance patrons, mid-20th century avant-garde collectives, or modern-day artist grants. Capitalism's relationship with creativity is not a simple enemy story. Capitalism needs creativity, but it tends to prefer a boxed, scalable, investable kind of creativity. the kind that generates predictable returns. That preference shapes the institutions, markets, and technologies that organize creative life, and it shapes us, what we make, how we make it, and what we value. If we care about radical, exploratory, messy human creativity, the kind that changes culture and opens new worlds, we need systems that protect time, autonomy, and material stability for creators. That means rethinking rewards, supporting public and collective alternatives, and resisting the idea that every creative act must be immediately profitable.